Thank you, everyone, for joining us for today's workshop on entrepreneurial finance with City College of San Francisco's Center for Entrepreneurship and Innovation, CEI. The center is led by Professor Vivian Faustino-Pulliam, an award-winning professor. In fall of 2021, CEI won an award from the National Association for Community College Entrepreneurship, NACE, and was officially recognized as the Entrepreneurial College of the Year. Professor Vivian has also led CCSF to win another award when USF and CCSF students took the prize for second place in the Emerald Case Study Competition. CEI, along with CCSF, offers accessible and inclusive education. CEI has been nationally recognized in part for its transforming education for entrepreneurs and micro business owners. CEI hosts a number of workshops, events, and discussions throughout the year, so make sure to check out our Eventbrite page, which we will leave in the chat. This workshop series is part of the courses that are offered in CCSF's Entrepreneurship program. The program has 6 tracks total currently. They are business, culinary arts, fashion and merchandising, visual media arts, broadcast and electronic media arts, and journalism. In other news, we are back in person, which is really exciting. Join us on Friday at the Check-In Wine Lounge with guest mentor Rani Selvaraju, a software executive at Google. This is a place where you can ask questions, share your story, learn from others, and celebrate. Today's workshop is in partnership with San Francisco's Small Business Development Center, SBDC. We'd like to extend a very warm welcome to everyone with us today from the center. Thank you for being here. Before we get started introducing the speaker, I would like to encourage everyone to ask questions in the chat. We will do our best to address these questions while the workshop is taking place. And if we don't get to your question, we will have time at the end for a Q&A, so we can have dialogue at the end as well. It's now my pleasure to introduce to all of you Sandra Garsele. Sandra holds an MBA in finance from the Columbia Southern University and is one of the managing consultants at Hilliard Management Group, Incorporated. She has over 20 years of experience as a business consultant working with clients to manage general ledger, payroll, accounts receivable, and accounts payable processes. She has worked with various small business development centers in the San Francisco Bay Area, as well as New York, for 15 years, training small business owners in bookkeeping and QuickBooks processes through workshops and individual counseling. Welcome, Sandra.
Thank you. It is really nice to be here. Thank you for having me. I will give you a little introduction on the Small Business Development Center, and then we'll dig straight into the exciting world of the small business finance. So Small Business Development Center, or SBDC, is really, we joke around as it's like the best kept small business secret, because not a lot of people unfortunately know about it, but it is a fantastic resource that offers free workshops as well as free individual counseling for people who are in business. And these centers are all over the United States. So every county has one, or some counties have like Alameda and Contra Costa counties in East Bay, they have one combined. So depending on where you are located, there's probably a SBDC where you can get free counseling in accounting, human resources, marketing, business planning, or anything else that your business may need help. And I think that's it about the SBDC. And now let's get started. I'm Sandra Garsele with Hilliard Management Group. We help small businesses with their financial accounting and bookkeeping needs, as well as general management consulting as well. So today, we're going to talk about basic accounting terms. We're going to talk about purpose of bookkeeping, why bother doing it. Okay, I'm going to talk about budgeting, financial reports, and also accounting support. And if you have any questions as we go along, you may just take yourself off mute and ask it, or you can type it in the chat, and Margaret will monitor the chat and she'll interrupt and ask that question and we'll answer that. And because don't worry about, like, don't think that your question is too basic or too silly. There's no such thing as a silly question, because maybe somebody in the class is asking something that will actually trigger something in your head, and everybody will benefit from that. Okay, so don't be shy. All right.
Can I ask a question?
Yes.
So very introductory questions. There was recently a session on bookkeeping basics and bookkeeping process. How is this process different than the current session of entrepreneurial finance? Is it same?
It's very similar.
Okay.
It's basically the same thing.
Okay, thank you.
All right. So let's get in it. Okay. So the key things that you will need to know is accounting terms. Okay, because depending on whom you're talking to, you will, like, when you get into the business and you'll need to talk to like a banker or accountant or investor, you will need to know some basic terms. Okay, so we have basically, so the basic thing, cash versus accrual accounting. Okay, so maybe like we have some accounting majors here who do know the difference, but I know that a lot of people who start the business and get in the business, they may be fantastic at making dresses, but not so great at accounting, or they're probably good at making sandwiches and coffees and lattes and everything else, but not so great at accounting. So that's why I'm going to talk about some basic terms here. So first is cash accounting. So cash accounting is basically when you track your income as well as your expenses when the cash is actually exchanging hands. Okay, so when you receive the payment from your customer, that is the time when you recognize that as income. And when you make payment for your vendor, that is the time when you count that as an expense. Okay, so the challenge with cash basis accounting is that you don't have accounts receivables and you don't have accounts payables, which you may think like, oh, well, that's good. That's like one less thing to worry about. But the challenge is that it's too easy to manipulate those numbers. Okay, so if you want to show like lower sales, you just simply don't deposit some payments. And if you want to show higher expenses, you just prepay some bills that are not exactly due yet. Okay. And it's kind of challenging to see what is truly happening in your business if you're just tracking your income and expenses on cash basis. And then on accrual accounting, we have this is where we recognize our income as well as our expenses as they actually happen. So when you send the invoice to your customer, that is the time when you recognize that as an income. And when you receive the bill from your vendor, that is the time when you account for that as an expense. Okay, so basically what you do, you match together your income with your expenses for that period of time. Okay, so if you had the project that you were working on, you're actually tracking all your income for that project and all your expenses that you generated in order to work on that project. Okay, so you have captured all your income and all your expenses. So let's take a look at the sample here. I'll show you the difference. All right, so in cash accounting, And this is like super simplistic example. You can, of course, you can put like in your notes, put like 2, 3, 4 zeros next to the numbers because these are very small numbers, okay? And super simplistic example. So cash accounting, we have sales of $50. We have expenses of $25, profit of $25. So in cash accounting, what this means is that you actually collected this $50 from your customers. You paid out these $25 to your vendors, and you have $25 left over. Okay. So if you're looking at this, and you might say like, hey, look, I'm doing great. First month's generating profit. I am a brilliant business owner. Okay. So then we have next month. Let's say next month we collected $100 from our customers. We paid out $50 in expenses and we have $50 profit. Again, you might like say like, hey, you know what? I am nailing this business, being in business part, right? So I can go buy a new house, make down payment on a car, do all sorts of good stuff. So what happens? So then in March, we collected $175. Now, all the like the bills that we got in January and February, but we just ignored them. Okay. So now we're starting to get like, you know, phone calls and emails and like people are telling us that they need to pay, you need to pay the bills, otherwise we'll discontinue your service. And then now all of a sudden you have to pay all those bills that you got, but you ignored, and you have $100 loss. Okay. The other challenge with this, with cash accounting, is that you don't really know, like, if this money that you got in February was for the work that you did in February or for the work that you did in January. The same as the expenses. Okay, was this the $50 that you paid in February? Was that for January's bills or was that for February's bills? Okay, so it's challenging to do analysis this way. Okay, so next we have accrual basis sample. So an accrual basis sample, we have sales of $100 in January, expenses of $100, and we have $0 profit. Okay, so if you remember from the previous slide, we had, out of this $100, we collected $50, and out of this $100 in expenses, we only paid out $25. Okay, but because we have captured all our income, because we have captured all our expenses, now we are able to do financial analysis. Okay, we can, because we have full sales, full expenses, we can now see like, okay, so what can we do better? So what can we do better to increase the profits and business performance, okay, for future? And that's really the key thing that you want to do every month, is to do analysis so that you can see what can we do better next month. Okay, what changes, like maybe there are like some small changes that you need to make, but that could make a significant increase in your profits. Okay, so February we have $150 in sales, $125 in expenses, and we have $25 profit. Okay, again, we have captured all our income, captured all our expenses. It doesn't necessarily mean that you have paid off, that you have collected all the income. It doesn't mean that you have paid all the bills. Okay, but it gives you a full picture of your income statement at this point. So in March, we have $200 in sales, $175 in expenses, and again, $25 profit. Okay, so the beauty of accrual basis accounting is that it gives you full picture. It actually tells you what is truly happening in your business. Okay. Any questions so far on, Michael has a question or scratching your head. You can just unmute yourself. No? Okay, any questions on cash versus accrual?
Could you just again explain the difference between cash and accrual? So is it like just we trying to include everything that is possible, like all the expenses that might happen? Like
No,
we do not ignore the bills, or
yeah, not what might happen, but what actually happened. Okay, so on cash basis, we're only including the actual cash transactions. Okay, so like the cash that we received from customers and bills that we paid to our vendors. But on accrual basis, we are counting for income that we received from our customers, but also what is still outstanding on accounts receivables. Well, okay, so let me back up a little bit, because this could be a little tricky, because like some industries, like income will be on cash basis, but expenses will be on accrual, because like a restaurant, right? Like restaurant, people come, they have their meal, they eat it, they pay for it, and they leave. Okay, or retail store. But if you have to invoice your customers, right? If you're providing a service and you have to invoice your customers, then like some customers may have already paid you for your services. Some customers may not have paid you for the services, but on accrual basis, you're counting all of it in that month when you actually perform the service. Does it make sense?
Yeah, got it.
Okay.
Thank you.
All right. Next, we have financial tax and cost accounting. So what's the difference here? So financial accounting is regulated by GAAP, generally accepted accounting principles. And this is where the financial accounting world runs on accrual basis. So when you need to give your financials to a banker or investor, they will want your financial reports on accrual basis so that they're able to compare your financials to other businesses' financials within your industry. Okay. And that's basically, like, financial accounting is like a fancy way of saying your day-to-day bookkeeping. Okay, it's the same thing. Then we have tax accounting. So tax accounting is regulated by state, federal, local governments. Tax laws change even when there's no pandemic, and when there's pandemic, it's a wild west of tax laws. So basically what it is, tax accounting is basically when you take your financial accounting data and turn it into tax forms. Okay, and there are many different taxes that you need to be aware of when you are in small business. We are not going to talk about any of them in any sort of detail, but what you do want to do is, like, once you have a business, definitely take some tax classes. Okay, you don't have to take like the full-on semester class on income tax, because maybe only a chapter may be applicable to your business, but definitely find some small business tax classes that are available, because as an entrepreneur, as the business owner, you are basically the responsible person, right? So like you can claim the ignorance, but unlike in a class where you may get a bad grade, in business it's just going to cost you money. Okay, so that's how you learn in business. You, like, if you didn't know there's some sort of deadline or some tax that you had to pay, usually you end up paying a penalty. Okay, no big deal. That's how we learn. But they're like, to be more prepared, definitely seek out some tax courses. Okay. And the last one is cost accounting. So cost accounting is generally used for construction businesses, as well as manufacturing businesses on a regular basis, because they need to be doing job costing. And that's where, like, for instance, for construction business, you would, if you're working on like remodeling somebody's kitchen, and then also like maybe filling in their pool and redoing the garage or something else, you want to track your income and expenses by that specific project, so that you can use that information for your future bidding. Okay, so like right now, like the construction industry doesn't really need to do that much analysis, because the clients are happy if you show up at all, because everybody is just so crazy busy. But when the times are normal, you actually do need to make sure that you don't overbid or you don't underbid on your jobs. But outside of construction and manufacturing businesses, for cost accounting, everybody should do it once, and that is when you're working on your business plan. Okay, and because you actually want to know, so how much does it actually cost you to serve the customer that sandwich or that cup of coffee? Okay, so that's what you would do there. All right, so I actually see there's a question in the chat that I'll come to real quick.
Would you like me to ask the question?
Yeah.
Sure. If a customer asks for a refund for a product or a service, should we report it on our daily report or deduct it from our monthly reports? Which is more effective?
That sounds like, okay, so it depends on, like, if it's like, is it like, is it for like a service or product? Because if it's for a service, you would normally do it like on like the next invoice, or you would do like a credit memo like the same day and and send it to them. If it's for a product, then it would be accounted for in a day when it gets returned.
We have two more questions.
I see that the tax class, I don't know any specific ones, but check out the SCORE SBDC websites, and they usually have them. GAAP stands for Generally Accepted Accounting Principles. Okay. And there we go. And their tax accounting classes at the City College. Perfect. All right, so now let's talk about the purpose of bookkeeping. So why do we bother doing bookkeeping in the first place? Wouldn't it be fun if we could just shove everything in the shoebox and then ship that shoebox to your tax accountant at the end of the year and say, "Hi, Bill, can you do my taxes? And while you're at it, can you also tell me how did I do last year?" Well, we have a couple issues with that. Bill doesn't want to deal with the shoebox, nor anybody else. So it's like, doesn't matter who it is. Nobody wants to deal with stuff in shoeboxes. Okay, and if you do have that, then it's going to just cost you a lot more money than it would otherwise cost. And so, and really the whole reason why you want to keep your books up to date is so that for you as a business owner, you have timely and accurate financial information on like weekly, monthly basis, okay, basically on regular basis, because it is for you. So don't think about bookkeeping as this chore that you need to do because the government needs your taxes. Okay, it is easier to do your taxes once your bookkeeping is done, yes, for sure. But it is really the core reason why you're doing it for yourself, is so that you, as a business owner, you can make management decisions based on actual information, not based on the gut feeling or the weather or whatever else people base their decisions on. Okay. All right. So here, the key thing for having timely and accurate bookkeeping is having a good, solid bookkeeping process and data flow. Okay. So there are banks and software companies who have ran advertising campaigns for decades, selling small business owners that all you need to do is download information. Okay, well, yes and no. So downloading certain things can speed up some processes, but really there's more than that. Like if you want to have good accrual basis financial accounting data, then you need to have good process. Okay, and like sometimes people resist that at first, but then once you start doing it, it's really not that big of a deal. Okay, and it can actually be kind of therapeutic for the small business owner to do their own bookkeeping and see like, hey, how am I actually doing? Okay, so this day was a really good day. So this day I had like $4,000 in sales. So that was great, right? All right, so the key processes in your bookkeeping. The first one is accounts receivable. Okay, and accounts receivable is a super important process if you are in a business where you actually have to invoice your customers in order to get paid. Okay, because and you can write it down if you haven't started your business, if you're thinking about the business. It may sound weird, but it's very true. If you don't invoice your customers, you will not get paid. Okay. It doesn't matter how fantastic is your product or service, doesn't matter of how happy your customers are. If you do not send them an invoice, they're not going to send you a payment. Okay. Also, for businesses that need to invoice customers, if you're in the industry that doesn't have really strict regulations on how often you can invoice as often as you can, right? Because the more often you invoice your customers, the better it is for your business's cash flow, because it's better to have to get 10 smaller checks throughout the week versus one large check, okay, every 2 weeks. It's better for your cash flow. So let's take a look at the accounts receivables process here. So it starts out with either it's like it's either something like some process got finished where completed work orders arrive, or it could be a date like the 15th, it's the 1st when you do your invoicing. Okay, you enter your invoices in your accounting system, send them to your customers, and file them by May. And most of the time you're going to be emailing your invoices to your customers, right? Because people are used to getting their information via email, so you don't have to mail anything unless you're in some industry where they still for some reason may want to see like a wet signature on your invoice. Then you may have to mail it, but everybody else usually can just email it. Then the next process in accounts receivables is, imagine that. So you sent out the invoice. Customers actually do have a tendency to pay. So cash receipts arrive. You prepare them for deposit. So if you get checks in the mail, okay, there are businesses that still write checks, and it's perfectly fine. So then you either scan the check or you take a picture of the check and before you deposit in your bank account. And most of the time you're probably going to deposit your checks with your phone, okay, on your phone app. So you will have that actual check that you'll then need to scan, because for every entry in your accounting system you need to have a backup. Okay, you need to have source document. So take money to the bank, enter it in your accounting system, and file it away. So you see that after each process, there's a file, okay? And so it's really super important that you have good filing system. Don't panic. You do not have to go to the office supply store and buy a file cabinet. It is okay. You can everything can be scanned and filed electronically. In case you get audited, it's perfectly sufficient to have electronic files.
We have a question, Sandra.
Yes.
From Jay.
Are you referring cash receipts to bank checks received? Yes. Yes, exactly. So cash receipts are like checks that you received from the customers in the mail. Very good question. Okay. So filing, definitely important to file. All right. That's accounts receivables process. So now that you have received your invoice to your customers, received your payments, you can think about paying bills. So bills arrive. So remember, in the small business, you as the business owner, you're the main controller in that company. Okay, so you need to review and approve all the bills before they get paid. This is especially important as you get a little bit busier, and you may have administrative assistant, or you may have part-time bookkeeper who helps you pay bills and who helps you with some data entry tasks. Okay, so super important that you still stay involved in your finances. So bills arrive, you approve them, they get entered in your accounting system, and they get filed away. Okay, so for most businesses, once you electronically file that bill, you will never touch it again. Okay, but for some businesses, let's say if you have a food truck or if you have a restaurant, and every day you get like 5 or 10 bills from every delivery that you get every day. In those cases, you could pick up one of those A through Z accordion files that they sell at the Office Depot supply stores, and you can organize them there before they get paid. Okay, so then next is new cash cycle begins. So cash cycle is associated with your payroll, because for most small businesses, and even like when the businesses get larger, payroll is still the largest expense. Okay, and that is an expense that doesn't float, because once you have told your employees that they will get paid at the certain frequency, right? That is the time when you have to pay them, and there's nothing you can do about it. So that's why you do the cash cycle analysis. Okay, so what cash cycle analysis means is that you look at your checkbook balance and see how much money do you have in your checkbook. Well, it's not going to be like those old cardboard copy checkbooks things, but it's going to be in your accounting system, right? You're going to look at your register balance, and then you're going to see, all right, so which customer is going to pay me before the payroll? And then see like, hey, do we have any transactions that will hit my bank account automatically, right? And then and you can see what's going to be left over after your payroll is covered, because the key thing is that you got to make sure that your payroll is covered. Okay. Then you pay your bills in your accounting system, send them away to your vendors, and file it away again. So the tip here for your accounts payables is that when you are in business, okay, and you may already have this set up for your personal expenses, but also for your business, definitely get a separate business checking account, separate business bank, business credit card. Okay, so, and for that business credit card, it is worth to pay that a little bit extra, whatever, $50, $75 a year that the rewards cards charge. Okay, so what you can do is you can set up your bills to be paid on auto pay from your credit card, and then you just pay that one credit card bill at the end of the month. Okay, and then that's like, that cuts down the processing time that you need to spend on paying bills, but it also extends the terms that you have with your vendors, so that instead of, so for instance, your phone bill, if it is due on, let's say, April 15th, and you pay it on time on your credit card, then your credit card is not due till May 15th. So now, all of a sudden, instead of having your terms net 20 with your phone company, you extended it to net 50. Okay, and basically you have money to use right now, short term, for other business expenses. Okay, so that's a tip for accounts payables. But please do not misunderstand me. By no means have a revolving credit on that credit card. Okay, that is very, very expensive way to finance your business. So always pay off that credit card. Okay. All right, so then next process is payroll process. So our payroll process starts out with pay period ending. Then you're actually going to do it online. I haven't figured out like a new picture for the for doing payroll online, because you're not going to call anybody anymore. It's like every payroll service has that online portal, which is really cool because you can just do the payroll yourself online and then just review the reports and make sure that everything looks right before you submit. Okay, so process it in their online portal. Review reports prior to hitting submit. Okay. Enter it in your accounting system and file it away. So it's super, super important to file your information. Okay, especially like payroll. As payroll is pretty competitive industry, like the couple of big players are ADP and Paychecks. So at some point in your life, you may have gotten a paycheck that's generated from them. And then and so they compete against each other all the time. So you may switch between them every other year or so yourself. So, but the key thing is make sure that you download your reports. Okay, your payroll reports and your payroll tax reports. Super, super important that you have them downloaded, because once you switch the provider, all of a sudden it's really complicated to get your information. Okay. And this process is based on you using payroll service. Okay. Because as a small business owner, most likely you are not going to be in business becoming payroll tax expert, but the payroll taxes are really sensitive, and there are really expensive penalties for doing them incorrectly. So definitely have a payroll company who does that for you. Okay. And the last process is bank reconciliation, which is basically making sure that what you did before adds up and what you have in your bank is matching with what you have in your accounting system. Okay. So you get your bank statement once a month. By the way, it's helpful to have your clear check images come with your bank statement. And those are the checks that you wrote to vendors. Okay, so review it, reconcile it in your accounting system. If there's a discrepancy, and the discrepancy would be like you wrote a check for $300, the bank took out $500. Okay, it does not happen often, but it does happen. Okay, so the reason you want to do a reconciliation is to check it, to make sure that everything is matching and is accurate. Okay, so you have option, like if there is a discrepancy, you call the bank. Sometimes there's an operator error, and you may just simply like not see some transaction. Then it's time to like, hey, get up, go for a little walk around the block, then come back and you'll probably see it. And then you don't call the bank, right? But if there's a discrepancy where they took more money or didn't deposit a check for some reason that you took to the bank, right? Things like that happen. So banks do make mistakes, not very often, but they do. Okay, but if everything is okay, you just file it away. Okay, so that is that. So those are the processes. So do we have any questions on any of the bookkeeping processes?
Doesn't look like it right now.
Okay, it doesn't look like it. Let's keep going. All right, so now let's talk about budgeting. because it's super, super important that you have one for your business. So importance of budgeting, like budgeting for your business is basically like having goals for your life, okay? Or having some sort of guidelines, because when you are a business owner, it is actually like a pretty lonely thing, because you're alone. You may have staff, but you're responsible for them, so it's also stressful. But there's nothing that tells you like, oh, you did a great job, your sales went up, you did a fantastic job. There's nobody to do that for you. So budget is kind of like, it can be that mechanism that you put in place for yourself to also like check on yourself and to make sure that you're doing good. So we have a couple budgeting techniques. One is zero-based budgeting, and the other is historical budgeting. So zero-based budgeting is just like the name says, it starts from zero. Okay, so we have, and we're starting out with our goal. So let's say that I want to have a goal of $10,000 a month in sales. Okay, so for me to have $10,000 in sales, I need to sell 100. Let's say that I'm gonna sell dresses. Okay, so I need to sell 100 dresses at $100 each. Okay, so next line item is COGS. That stands for cost of goods sold. So these are the accounts that are directly related to your income. Okay, so for me, in order for me to sell 100 dresses, I either need to make them or I need to buy them. Okay, so I'm gonna buy them from somebody else. So I'm buying my dresses at $50 each. So I have to buy 100 dresses. Okay, at $50 each. So I have 100% markup. So my cost of goods sold is gonna be $5,000. Okay. M&S, that's my marketing and selling expenses. So I'm gonna run 4 advertising campaigns at $250 each. So that is $1,000. Then let's say my G&A, that's general and administrative. So let's say that I'm gonna buy 50 gigs of data at $10 each. So that's gonna be $500. So my net income is gonna be $3,500. Okay, so this is like super, super simplified, basic zero-based budgeting. Yours will probably have, like, when you're working on your business plan, your budget will probably have more detail. Okay, and really the only time you're gonna be doing zero-based budgeting is when you're working on your business plan. Okay, because you don't have any historical data. Like once you have historical data, then we will have we'll do historical budgeting. And I see we have a couple questions. First, I'll start with J. What was G&A? G&A is general and administrative. So basically your overhead. Okay, like your administrative expenses. And then, oh, that's confusing. There are 2 J's. Okay. And then the other J, does payroll go into G&A? So payroll is actually an interesting one. And we'll look at the historical budget and look at the accounts, and you'll see the difference. So depending on what it is. Okay, so let's say that you are, let's say bakery. Okay, so you are, so if you have people who are baking, so the actual bakers, Their payroll will go under cost of goods sold, right? But then you have also the front counter people. Okay, so they're basically your salespeople. So the front counter people will go under marketing and sales. And then let's say that you're really busy and you need administrative assistant. So that administrative assistant's payroll will go under general and administrative expenses. And the reason why we want to break it out so that you can do better financial analysis. Like for tax purposes, your tax person doesn't care. Even if the payroll is just on one line, right? It doesn't matter for them because they only need that one number. But for you, for your analysis, you need to know that. Okay, you need to have that breakdown. All right. So that's our zero-based budgeting. Now we have historical budgeting. So, so historical budgeting is when you take your 3 to 6 months worth of financial information, and based on that information, you then put together a budget. Okay, because you're looking at the history. You're looking at last 3 months, last 3 to 6 months. So, and by the way, this could be interesting for if here are some people in the program, if you already have a business, it could be like an interesting experiment for you to look at it, to see like, hey, look at your historical information, look at your last 3 to 6 months by month, and see how either consistent or inconsistent some accounts are, because your general and administrative accounts should be really consistent because your phone bill is the same every month, right? So if you have a rent, it's the same every month, or if you pay for maybe post office box, right, to get your mail, it's the same every month. So certain costs are really consistent. The ones that vary will be your income and your cost of goods sold. So let me see. So if I hold on like that, hold on, a little technical difficulty here. All right. So can you see the Excel spreadsheet now? Yeah.
Yes.
Yeah, perfect. All right. So here is a sample budget. And so you do want to use, like, Excel is great for putting together a budget because you can put in assumptions. Okay, so we have this particular budget is for little boutique. So we're selling clothing, jewelry, and accessories. Okay, and my cost of goods sold accounts, okay, or COGS. And let me just take a couple minutes about cost of goods sold. So even if you're not selling inventory, you still have direct costs. Okay, so even if you're providing service, you still have direct costs. So let's say if you are, if you're an accounting firm and you have other accountants working with clients, then those other accountants will be your basically cost of sales, right? Because they're directly contributing to the revenue of your company. Okay, so in here in my clothing boutique, I have clothing purchases, jewelry purchases, and accessory purchases, okay, for different budget line items. Then we also have payroll for the direct costs, right? Payroll, cost of goods sold. And within that, we have wages, payroll tax, and benefits, right? Those are the 3 main components that you'll need to have once you have payroll. And then we have outside services, right? And that's going to be, outside services will be somebody like a contractor that you may use for something. Okay, but that's not on payroll, but it's really super tricky now in California because they just passed a law where you're not supposed to have contractors working directly for the kind of work that your business is charging customers for. Okay, so just be really careful there. Store supplies, okay, freight in, refunds, okay. Yes, we will actually send you, we can send you this spreadsheet for sample, or I see there's a sample budget also in the Canvas that's different. That's probably also good that you can just plug in your numbers. Okay. Then we have marketing and selling budget. Okay, and like actually go back. So for your income, you can see that, okay, starting month 3, we're adding like additional $500 a month, right? So we're targeting, we're going to grow. Then your direct costs, okay, like I have 100% markup, right? So it's 50% of my sales here. Okay, and that's where your historical information comes in really super handy, because you look at like your last 3 to 6 months of information, and there you can see like, okay, so what are your actual percentages, and you can use that based on what you had in the past. You can put in those percentages in your budget for the future, and then you can see, okay, what's going to happen in future if you change something, right? So then, okay, passing down to marketing and selling expenses. So these will typically be the same. Okay, so you have, it's pretty much the same every month. They like actually the commissions will change based on your sales, right? But everything else will be pretty much the same. Right, travel, marketing and sales, your merchant service fees, your meals. By the way, you can see like some numbers here are really small. Okay, so for the ones that like you can see like all these $30, $50 categories. So those are accounts that we may think that, hey, maybe I'm not gonna have any expense in that category, but put in a little buffer. Okay, so when you do your budget, be conservative. And it's a little tricky. So conservative means 2 different things. There's conservative on income side means that, okay, if you think that you will have $35,000 in sales, well, budget like 31. Okay, give yourself space to do better. But it means it's opposite on expense side. So if you think that, oh, I'm not going to pay for any parking, I'm not going anywhere, put in $25. Okay, put in $30, put in $20. So you have that space holder so that you can do better than budgeted. Also, okay, fine, maybe you didn't spend anything this month, maybe you're not spending anything next month, but maybe you need to spend, maybe there's like larger expense coming up once a quarter. So for the quarter, you're still going to be within the budget. Okay. All right. So let's see. Payroll. So here, and as you can see, we have payroll in all 3 categories, right? So we have payroll under cost of goods sold. So these are the direct people. We have payroll under marketing and sales. And for small companies, a lot of times you won't have it, right? So it's really seldom when where you may have somebody on payroll actually doing marketing and sales for your company. It's possible. If that's your business model to have that, but that's usually the business owner is the main salesperson. Okay. And by the way, if you're thinking that, oh, you hate sales, take a sales class and get good at it, because as an entrepreneur, as the business owner, you are the main salesperson. So make sure you get good at it and get over your fear. Okay. And then we also have general and administrative payroll, right? So this is going to be your, like, if you grow and you have office manager and some other office staff, so then they're going to be here. Okay. So your general and administrative expenses most will be like accounting and legal fees, like your tax preparer, your payroll service, your bookkeeper, bank charges, postage, right? Every once in a while, you still may need to mail something or ship something. Office supplies, office expenses. So those are office supplies are like pens, paper. Office expenses will be like your Office 365 subscription, or maybe your Zoom subscription, like any other software that you may need. Telecommunications. So when I started teaching these classes, people still had faxes. Now I think it's only like the employment verification organizations have that, or mortgage companies. But like in telecommunications, that's your phone, your internet, your phone, internet. What else is there when it comes to telecommunications? I think fax is dead, but basically you don't need to have more detail than this, right? So then we have rent, utilities. Okay, utilities, that's your electric, that's your garbage, that's your water. If you have to pay that, okay, in your space. Then we have building repairs and maintenance. Things break down every once in a while and you have to fix it up. Equipment repairs and maintenance, that's going to be like your IT person needs to do regular computer maintenance. $20 a month, probably not enough, but maybe $60 a quarter if they only check something for half an hour once a quarter. That might be sufficient. Computer supplies, that's like mouse, keyboard, anything small for your computer. And pretty much anything under $2,500 will be under either general and administrative expenses, one of the categories, or under marketing, one of the categories, right? Because for something to be categorized as a fixed asset, it needs to be $2,500 or more. Okay, then we have meals, G&A, that's meals for your office. Travel, G&A, that's your office staff, right? Publications and subscriptions, that would be like books, magazine subscriptions. If your business is hair salon or spa, people like to have to read like People magazine or something while waiting for their appointment. That's like their bubble gum for the brain, right? Continuing education, professional development, if you take a class or like a course or go to like some seminar for your trade, and some minor other costs. So you see, like all these $20 costs, put them in. If you think that you're not going to have anything in that category, put in something so that you don't panic when you do actual versus budget analysis, and that you're still within the budget. Okay. Give yourself space. Okay. All right. So that's your historical budget, and that's the template that we can send you out. There's an email at the end of the handout that you can email for this particular spreadsheet. Okay. So now let's get back here. So any questions on I can see the question. Dmitry has a good question. Yeah, do you want to read that, Margaret?
How do I file my personal funding to the corporation? Can I take it back when I have a profit?
That's an excellent question. So you can do it a couple different ways. You can either do it as a loan. So if you give it as a loan, then you take it back when you start making money. Or you can put it in as an investment, and then it stays in your company as an investment. But it sounds like you would like to have it back. So then in that case, you just you put it in as a loan. Okay, basically you loan your company money. All right. So now for the budget, there are some resources, right? So especially like when you're doing historical budget, and if you've been in business for more than 3 to 6 months, then you're like, okay, so this is kind of my deal, and this is what I'm doing. Then you may not need the industry statistics so much, but it would still be kind of cool to check to see where you stand comparing to your peers. But when you're working on your business plan and you're working on your zero-based budgeting, that's when you really need the industry statistics resources. So, and you can get those at your, go to the San Francisco Public Library. They have a whole floor on the, or portion of the floor. There's a pretty big business section. Okay, so it's right there. SCORE has a Business Information Center library, so you can get the industry statistics there. You can just Google, you can go online to bizstats.com. It's a free resource and it's totally functional and fine. I did put it one paid service here, but there is absolutely no reason at all to pay for this information because there's plenty of free information out there. But if you are dying to pay for it, then that's fine. You can go to bizminers.com. I just like their name, but you can also do the Google search for industry statistics for businesses, and then you can find another service you might want to pay for. Okay, so but definitely there are resources out there, and there are a lot of free resources, so you don't have to pay for them. So any questions on the budget? Any other questions on the budget, or should we? Doesn't look like it, right?
Don't see any.
All right. So then let's move on and let's talk about financial reports. So really, this is basically the results. Your financial reports are the results of your staying up late at night and doing your data entry and getting all the information in. And the reason you want to have financial reports is so that you can make your management decisions based on actual information and not based on gut feeling or like, okay, it's hot outside, so let's not go outside today. Okay, but your business is such that you actually have to go outside. So the purpose of financial reports is to identify areas within your business where you can increase your business's profits and business performance. And this is why it's really, really essential that you do have timely and accurate financials, because if your information is not timely, it's not super helpful. If your information is not accurate, it's also not helpful. Okay, it has to be both timely and accurate. And that's where really, like right now, it's like April 7th. If you're in business, if you have a business, you should be able to do your financial analysis like today, tomorrow for March, right? And you can see how your March, how is March, because you should have your bank statements, you should have your credit card statements all reconciled and entered so that you can see what you might possibly need to adjust. Okay, because you need to be able to identify the variances or the issues as soon as possible so that you can adjust it, and you can adjust it now and not 3 months later, because the 3 months later will be that much less margin for 3 months, or you could have tweaked something a little bit, right? So there's like, everybody probably have heard a story about like the, like in the horse races where like the difference between the winning horse and the horse that comes in second is, it's not like that horse is that much better. It's just like by a nose better, right? And it's like you're just better by a nose, but that difference is like huge difference in the prize money. And the same thing in like small businesses, like, hey, you need to identify what's happening so that you can make adjustments, and like that 1-2% difference in your gross margin can be significant change to your bottom line. So the key financial reports that we're going to look at here, we have a balance sheet. Balance sheet is a snapshot of your business at a point of time. You can think about it as, okay, somebody came along and took a picture of your business and said like that picture, right? And said like, okay, so this is how much money you have in your checking account, how much money you have in coming in your accounts receivables, how much money you have to pay out in bills, and what's left over. So the balance sheet also follows the equation that is assets equals liabilities plus equities, or A equals L plus E. Okay, and sometimes you may have heard some bookkeepers say that, oh, my books, or some accountants say that, oh, my books are out of balance. So usually what that means is that equation doesn't hold true. With today's accounting systems, usually there no such issues, but every once in a while, they do go out of bounds. I don't know, I think I'm on the right slide. I should be on the financial reports. And I'm talking about the balance sheet. So, and then, okay, and remember, so the balance sheet is a snapshot. Okay, and when you're looking at your balance sheet, you look at your like how much cash you have, how much coming in, and what's left over. Okay, and then you should be looking at probably like once a month. So when you reconcile your bank statement and your credit cards, that's when you would review your balance sheet. Okay. Then we have profit and loss statement, also known as income and expense statement. Okay, so it's kind of tricky that the same thing has several names it goes by, right? But what it is, it's like a movie about your business, where it looks at your company's income and expenses over a range of time. Okay, and you can look at your profit and loss statement for like various length, right? So it can be like a short movie. You only look at it for like for a 2-week period or a month, or you can look at it for a longer range where you can look at a year, couple years. Okay, so, and this is like the reason I want to let you know that it has 2 different names is because in QuickBooks, which is the accounting system that most small business owners use, right? Because it does work and all accountants know how to use it. It is called profit and loss statement, but in maybe in your loan application, it may be called income and expense statement. Okay, so just know that it's the same thing. Okay, so the key things here for the profit and loss statement is to look at to do comparisons. Okay, look at your actual versus last period, last year. So if you have been in business since like 2019, you know, like 2020 and 2021, where like it's like we're coming out of like a really weird period in the businesses where a lot of traditional analysis that you'd be looking at are kind of like unapplicable, because you may say like, oh, okay, so when you're looking at actual versus like, let's say, March 2021 versus March 2000, no, where are we? 2022. So March 22 versus March 21, you might see like, hey, I'm doing so much better. But if you were in business in 2000 prior to pandemic, are you back at your 2019 levels? Right, so that's what you really need to look at and analyze it. Like, hey, are we back to the pre-pandemic? Okay, then the more current one, like you would say, actual versus last period. So that would be March versus February, right? So that's also a little bit tricky because March is 3 days longer than February, right? So if you have daily sales and if you're like invoicing on hourly basis, or you know, like you have like things for that period, it's also like, oh yes, so March was better, but February was much shorter. Okay, so they're like, when you're comparing your financials, also look outside and back up and see like, oh wait, okay, so it's like that because there we have 3 extra days, right? Then actual versus budget, super important report, and this one is the one you want to look at and make sure that you know, your budget is reasonable. Because at first you may, like, the budget is living, breathing document, right? So if you are not a not-for-profit or a company that did a bunch of or a startup where you have other people's money and you have involved and you have a board that you're reporting to, like for those people, yes, once the budget gets approved, it's stuck, right? It's like that for the next year. But for most small business owners, it's really like, it's a living, breathing document. You do your actual versus budget comparison and you say like, hey, you know what? I'm really off in this one area, and I've been off in this area for like months. So you can decide like, okay, are you going to make change in that area? Or you are going to update the budget. Okay, and it's fine. It's fine to update your budget. And then we have actual versus year-to-date percentages, right? So this report on for the income statement, this is the one where you're gonna analyze your gross margin and figure out if your gross margin is in your targeted range. Okay, because if you can see, if usually your gross margin is at 50% and now all of a sudden it dropped down to like 45, you need to go and investigate and figure out what happened. So if your suppliers are raising the rates for you for your product, then you need to make a decision like, hey, are you going to increase your pricing, right? Because you can increase your pricing and you can, or you can you know, suffer and take the hit, right? But usually it's better if you increase the pricing, because that's really all that means. So like all the like at the end of the day, it's the customer who is gonna pick up the increase in like minimum wage or increase in shipping fees. Like customer is gonna pick up that cost. Right? So your profit and loss or income statement reports, you should look at those at the minimum once a month. Ideally, you would look at it around the 15th so that you can see like, hey, how I'm gonna do for that, so you can have an idea how you're gonna end up for the months, right? And also that you can have an opportunity to go and make some additional sales calls or make some, you know, go to some networking events or go meet some people to drum up some more business, right? All right. So then we have statement of cash flows. Statement of cash flows is this really cool report, but it's also a super misunderstood report. Is like it tells the small business owner where did the money go or where did the money come from. Okay, so why did you have $10,000 at the beginning of the month and why do you have 5 at the end? Okay, and what statement of cash flows does, it looks at your changes in your balance sheet of accounts and tells you how is that affecting your cash position. Okay, so and this is also a report that you should be looking at on a monthly basis. Okay, so now we have accounts receivables report. So accounts receivables report is a report that tells you who owes you money, right? Which customer hasn't paid you yet. And so this one should be looked at on weekly basis if you're in a business that has to invoice your customers, right? And you look at it on a weekly basis so that you can make your follow-up phone calls with your customers prior to your invoices getting over 90 days, 60 days past due, right? It's much more effective to make that phone call when your invoice like a couple days late versus when it's like 90 days late. Okay. Then we have accounts payables. So this is also a report that you're going to be looking at on a weekly basis. And this is the report that will show you who do you need to pay. Okay, what bills are outstanding for you and when do you need to pay them? And again, look at it on a weekly basis so that You don't end up paying late fees just because you know, you didn't notice that the bill was due. Okay. So all of these reports will be generated by your accounting system. Okay. So next one, cash flow forecast. So cash flow forecast is a report that you will be generating outside of your accounting system. Okay, so this is something that's like can be looked at I read the chat note and then
we have a
forgot what they're
question
talking
from
about.
Jay. How often should we look at our balance sheet?
Balance sheet, income statement, and a statement of cash flows. Look at it every month. Okay, and yeah, it's like basically on the balance sheet, you want to look at it after you reconcile your accounts. Okay, you want to make sure that the accounts are reconciled and accurate, and then you look at it. Okay, so now the cash flow forecasting is something that you generate outside of your accounting system. This can be like your crystal ball for your business, where you can see like, hey, what is going to happen with my cash in future? Okay, so you see like, so it has three major components. It has the current balance sheet, and it has to be accurate. Okay, so really like it comes down to like all the reports, they have to be accurate. Only accurate reports can be analyzed, right? You can't analyze garbage. But you can, but you're basically gonna sort through garbage, so there's no point. So the cash flow forecasting has the current balance sheet. It has profit and loss budget. Okay, within that budget, it has the components that we looked at: the revenue, the personnel costs, direct costs, marketing costs, general and administrative expenses. We have balance sheet assumptions. And within balance sheet assumptions, we have assets, liabilities, and equities. Right, so the main asset, like within the assets, your assumptions would be like, okay, so how fast are you going to collect your receivables? Okay, that's important. Within your liabilities, you have like, okay, so how fast are you planning to pay off your liabilities, your bills, your loans, right? If you, by the way, if you have good interest rate loan, don't try to pay it off earlier, because it's better for your cash flow if you use that excess money to invest in some short-term asset or some short-term thing that will generate more revenue for you. Okay, and equity. A lot of small businesses start their businesses as sole proprietorships and partnerships, so they have to balance. So they have to budget their draw. Okay, how much are you getting paid yourself? So that needs to be budgeted, because just because your child needs braces, right, doesn't mean that you all of a sudden can pull out extra $5,000 that month, right, and not pay some suppliers. It's not great business. Okay, so this is the cash flow forecasting process. Okay, and I would suggest you to come to like the financial analysis class that is taught with the SBDC, where we dig in a little bit more detail and look at the sample for this one. Okay, so now at first, at your startup phase, you're probably going to be doing everything yourself. Okay, and that is fine, and that is great. One of the first things that you're gonna offload or get somebody right away to do for you is a CPA and tax accountant, right? Somebody who can do your taxes, because once your taxes are a little bit more complicated than just your W-2 income, it is actually worth the money to pay for a good small business tax accountant, because they should save you more money than they cost. Okay. Then financial accounting, somebody who can help you analyze your financials, work with you on the budget and the cash flow forecasting. And maybe once you get tired of doing your own bookkeeping, you may hire bookkeeping support. Okay, but at first, I would highly recommend get help to set up your systems and get help on getting trained, but do it yourself. Do it yourself for a while so that you are really in tune with your financials, so that you know how your business is doing, so that you know what's happening, and also you know how long it should take. Okay, so if you have if you're doing your bookkeeping within, like, let's say maybe like 4 hours a week, then if somebody comes along and says that, oh, it's going to take them like 12 hours a week to do it, well, you know that there's something wrong, right? But had you not done it yourself, you wouldn't know it. So be empowered. Okay? Payroll service. The day you hire your first employee, I would highly recommend you also get a payroll service. Okay, it's not worth, the penalties are really not worth it. There are payroll services out there, they're quite affordable. Like the big guys, once again, are ADP and Paychex. There's Gusto is the San Francisco based payroll company that's pretty popular with the small businesses. Intuit has the payroll that's built into the accounting systems. Okay, so definitely get help with that part. Okay, because that one is not worth doing yourself, because the penalties are just too great. Okay, not to scare you, but there's some things that you should do yourself and some things that you should not. Okay, right. And actually, you know what? That is all I have for today. So we are at we have, does it go till 4 or 3:45? Am I over or am I early?
Till 4.
Okay, cool. So we do have time for questions.
Feel free, if you have a question, to unmute yourself and just ask.
There's no silly question. Or maybe everybody is out on their decks sunbathing. It's such a nice afternoon.
Well, maybe while we're waiting for folks to ask questions, if they have any, we could all turn on our cameras and take a group picture. Is that all right? All right, everyone.
Thank you, Margaret. And do we have any question?
Smile on 3. 1.
Oh, I thought it's done.
I think Kathleen has a question.
No rush. Okay, yeah, we can ask questions first. That's fine.
Oh, okay. I was just wondering, Sandra, I've been to a couple of your workshops and you're really great. I really enjoy your thoroughness. I'm just wondering, with the reports that you were going over in this, if you do this again, or if at some point you have samples of those too, just, I think it's kind of easier to visually and conceptually maybe understand it just if you happen to have samples like that.
We
spreadsheet.
actually, during the financial analysis workshop, we look at the samples on that one.
Okay, so is that a city college? Because I think I signed up through this through the small business.
Yeah, the SBDC has
yeah.
it, like, so there's there are always two. There's like the basic bookkeeping, which is kind of like a little bit longer version of this one, and then the financial analysis class. In the financial analysis class, we actually look at the samples.
Oh, great. Okay, thank you.
Yeah. All right, the group shot.
Okay.
All right. So I'll take the group photo on 3. If you haven't, if you're comfortable showing your face, that'd be awesome. All right. 1, 2, 3.
Thank you, Margaret.
Thanks, guys.
Right. Any other questions before we close and wrap up this session? No?
Can I double check about that spreadsheet with expenses?
Hmm?
Can we download it or not?
Which one? The budget spreadsheet?
Yeah.
Oh, you know what? Email, like if you want that particular, Anastasia, just send an email to this email, workshops@hilliardmg.com, and we'll send you that sample.
All right. Thank you. And where is that mail?
It's right here, like workshops@hilliardmg.com. It's on the slide.
Oh, okay. Just a
Sandra,
moment. Yeah, I see.
Are you talking about the worksheet the spreadsheet that I was asking about that you were going over?
Are you talking about the budget one?
Yeah, I think so. It was the month-to-month
Yeah.
spreadsheet.
The budget.
That's a
Okay, so
budget.
you want us to ask for it? Okay.
Yeah, just email and then we'll send it out to you.
Okay, thank you.
And I just want to also announce for City College students that we have a very good relationship and partnership with SBDC. So if you're interested to learn more about finance, accounting, they have the bookkeeping workshops and the other ones that Sandra mentioned. You can also sign up for those workshops. So also they offer advising and consulting services. So you can also reach out. I will paste the link to go about that. The center or the SBDC is a link to schedule an appointment with any of their consultants. And if you want to add more to that, Sandra, please feel free to.
Yeah, for the counseling, the SBDC's counseling is for people who are in business and or have like business-ready business plan. But if people are not yet in business, then there's like similar one that is SCORE. I think SCORE also takes the pre-business. But definitely, yeah, like once you're ready to jump, take advantage of all these resources because they're really good and they're really helpful for you to to have somebody to go to.
Yes, so that's why
it can be scary to be your own boss.
Oh yeah, especially finance. Like what you said, the penalty and all the consequences is not really worth it, if you're going to just take the risk on that. So, and I'd like to, I'm sorry, there's one more question there. If you could take that, Sandra, from Jay.
Absolutely. Oh yes, Jay. 1 person on 5, it's the same amount of forms that you have to file. So yes, that like the day you hire your first employee, you should also have a payroll service. Yeah. And then they're different ones. So like like the big guys have like the full service and they're pricier. But if you feel like you can do more yourself, then you can have something like the smaller payroll services that you may have to like actually initiate the payments yourself. But if you feel comfortable that you're not gonna miss them, then you can do that.
All right. Well, thank you
All
so
right.
much.
All right. Well, I have a gift for everybody then. I am gifting you 4 minutes of your time back to this afternoon.
Okay. Well, Sandra, thank you so much for facilitating this very important workshop. And we are all looking forward to maybe some students joining you in other workshops with SBDC. Thank you.
Absolutely. Absolutely. Well, thank you very much, and enjoy the rest of your afternoon, and good luck in your program and in your business.
Thank you, Sandra.